Welcome back, everyone. Thanks for coming here. Hope that was a great session with Edward Snowden. I missed it. I'm going to have to watch and replay. I was backstage. We're here to talk about exchange business models. I'm Nolan Bauerle, your host. I'm the host of The Breakup, a daily morning show on Bitcoin Magazine, 8 a.m., on Rumble, on my own personal YouTube. It's a real fun show. Watch it sometime. We do talk about exchange business models a little. We're interested in it. I used to work at Kraken. I was a strategist there, so that's how I have some context for what's going on here. I'm going to start by saying I saw a 60 Minutes broadcast. So for those of you who don't know what 60 Minutes is, it's an American fake news television program. And it comes on Sunday nights. And they had Michael Lewis on the day, who was a keynote at Bitcoin 2023 in Miami. And Michael Lewis, the writer of, I think it was Infinity Game or something about SBF, said that FTX had a good business model. That's what he said. He said SBF had a good business model. He should have made money. Luckily, we have people who can do a bit of verify and not trust Michael Lewis, right? We have to verify, not trust Michael Lewis at this point. And we got some folks who can tell us, is Michael Lewis correct? Did SBF have a good business model?
SBF had one good idea, which was actually extremely good. And as I was saying backstage, he built the best casino because they were the first exchange to allow multiple assets to be collateral for multiple assets, meaning you could deposit Bitcoin and trade any one of the products on their exchange. You could deposit Ethereum. Unfortunately, you could also deposit FTT, as it turns out, and other crap coins, which really shouldn't have been used as collateral. But that facilitated the growth of the exchange. And the model itself was profitable x all the expenses. I mean, it's unlikely, based on the data that we now know, that they were able to cover all the political donations and ridiculous marketing expenses, that was all part of a shell game. But the fact is, the exchange itself worked well, and at CoinRoutes, and what we do is we provide algorithmic trading across multiple exchanges worldwide for people, as well as market makers and counterparties. Our clients were heavy users of FTX, and so we had a crazy number. 15 of them went bankrupt, and lots of others were dramatically impacted. So I'm fairly emotional on the issue, and him lauding Sam Bankman-Fried is not a good thing.
Now, you say that because when you talk about your platform trading participants, people are on the platform. Of course, when you're dealing with that sort of sophisticated user, a lot of vetting has to go into who these people are. You've got to have sort of a high completion rate of their trades. They got to do what they say they're going to do, right? Yeah. And when something like that comes in and basically pulls the rug on all of them, you're left having to try to make these trades and match these people up. You know, how does the reputation of what he did, how does it affect the reputation of the overall business? And is that reputation part holding us down for a year, for another year, for longer than that? Reputation here being an important factor.
Well, it's a disaster in terms of politically, but the industry itself is resilient, and the industry would recover, except for interest in the products are way down. I mean, volumes are down 70% or so, give or take, you know, over the last couple of years. It's pretty obvious that it caused problems. I mean, keep in mind, when people were trading on FTX, we had very sophisticated clients, and they knew that Alameda had backdoors, at least so far as be able to front run or do other things. And yet they found it still a reasonable casino to trade in, and they just understood that part of their trading cost was letting Alameda kind of skim some off the top. And, you know, that should have been the first warning sign, but people didn't care because they saw their name on the side of stadiums or on umpires, vests, so everyone who watched an American baseball game saw it. They knew they were the single biggest political donor. I mean, bigger than Microsoft, bigger than the banks, bigger than Big Pharma. FTX was the biggest donor in the last political cycle, which is just an insane number if you think about it.
Especially when you look at the numbers. Now, they ran what some people would describe as a platform for sophisticated users, all of this margin trading. But it turned out they didn't even do the basic thing that Bitcoin requires you to do, which is to segregate deposits and not commingle accounts, and especially focus on the back-end custody solutions and how these things are going to work. Now, Mark, with Bitvavo, you guys have taken sort of the opposite approach to what they're doing. It's about getting the basics right first. So just describe someone who, first of all, describe that part of your platform, the attention you put into making sure customer deposits, if you want to call them that, are treated with the expectation that they had when they did it, and then that other part with the derivatives market versus what we can call spot, and just for retail and very simple approach. We're going to talk more about spot in a second, but I want to get your thoughts on derivative and spot and FTX and the custody solutions.
Yeah, sure. So with Weisberger, we are one of the biggest exchanges here in Western Europe. I think we invest a lot of time to build proper custody solutions. So when we initially started with our company, we had our internal custody solution. Over time, the market matured more and more. So we started to use custody solutions like Coinbase custody, Fireblocks, and Copper to ensure that we store customer funds in an insured way and in the best way possible. I think that's a hygiene factor to ensure that you can do your business. And we only use funds in other ways if customers give approval for that to generate yield or other things. And I think what we saw after FTX, that we saw a huge inflow of customers coming to our platform because they went away from offshore exchanges. So I think we saw, as a regulated platform, a lot of inflow, which was good to see. And we also currently see a lot of focus on maturing the custody solution even further in the business in general. Secondly, we mainly do spot business. Why? Because we mainly offer our service to retail customers who see spot service as a more convenient service compared to derivatives business. And I think compared to FTX, I think you will see there are more advanced traders who will also use more leverage and other kind of things, which I think is a different game. I think that's not our core focus at the moment. We, of course, see that there is more and more interest in the market for derivatives business, but it's not our core focus for now.
Now, what I have seen, and you can tell me if I have it correct, right? The SBF thing, what I saw was FTX probably scalping and betting against their retail users. Alameda, who was accessing depositor funds on the FTX side, was having the same thing done to them by other sophisticated traders in OTC outfits. Just what I've heard anecdotally, so I'm not wedded to this. But I see one fish getting eaten by a bigger fish, getting eaten by a bigger fish. And I think of that as pretty in line with what we see in general. So I don't know if that's true, but I see it as in line with what we see in general with institutional Bitcoin folks having much more efficient price discovery than the retail side. Retail side definitely not getting the best deal out there. And even what we were talking about before off stage, retail Bitcoin buyers getting a worse deal than retail investors would get buying a blue chip stock like IBM or something else. So this idea of FTX, the interplay we saw between sophisticated traders, retail buyers, traders, investors, and that picture being replicated in the wider Bitcoin market with sophisticated traders and retail buyers. Is that a consistent view?
I mean, sort of. Half yes, half no. Look, the overarching important point for this audience is simple. Bitcoin, to achieve mass adoption, needs to have lower frictional costs, full stop. Yes, you can do peer-to-peer on the blockchain. We all get that. But the vast majority of human beings on this planet want to equate Bitcoin to a currency, whether that be dollars or sterling or euros or yen or whatever. And the cost to buy and hold Bitcoin right now is usurious compared to other investments. I mean, an American, a European, a Brit can buy stock in their favorite company and pay almost no commission and get spreads that are tighter than institutions get because their orders are smaller. In Bitcoin, institutions average, well, it depends on who you use, but institutions pay, I don't know, the average that I've seen is around 15 basis points of slippage when they're buying large orders in Bitcoin. Our clients, CoinRoute's clients, actually the average slippage is around 5. But, we're a little bit more sophisticated than most. But, if that matters to you, it matters. Retail pays over 1%. And so if we want to see Bitcoin get mass adoption, we need to get the cost of buying and selling down. Curiously, when the Bitcoin ETF goes live, they'll be paying a management fee on the back end, but the spreads to trade will be like equities. So they'll be paying 0 commissions, and they will be paying spreads that are tighter than institutions. That's one of the reasons the Bitcoin ETF will drive mass adoption, but it's kind of sad because the Bitcoin community could do that. And the biggest Bitcoin maxis who have platforms to buy Bitcoin have 1% spreads built in. And that's kind of a big deal. Now, FTX really wasn't like that. FTX US and FTX had lower commissions than other exchanges for retail, and they weren't really taken advantage of per se. It was the institutions that were getting taken advantage of by Alameda. We had lots of quant hedge funds. They said there was about a 20 millisecond head start Alameda had on orders, which turned out to be relatively expensive. It was still within a couple of basis points here or there, so it was small, relatively speaking. But that platform had issues. But their biggest issue by far was the fact that they allowed Alameda to lose, well, we all heard it in the trial, $65 billion. It never got that big, obviously. But they literally gave them unlimited losses and made everybody else socialize those losses within the platform. So it's sort of two different issues. But the fact is, Bitcoin adoption will be driven when frictional costs go down. And exchanges don't want to hear it, but they kind of know that's true. Most exchanges have what's called tier rates, and the low volume rates are very expensive. Now, that literally doesn't exist in the traditional financial world, and if you want mass adoption, it will ultimately, those rates will start coming down.
Now, in Europe, you've already experienced the ETF market disruption, let's say, maybe not at the scale it will come that we're looking at in America coming up, but we've seen the exchange traded note in Sweden. We've seen the recent ETF here in Amsterdam just a few weeks ago. From your point of view as a Bitcoin spot exchange, have you seen that effect already? Are you anticipating it? Do you feel any pressure on the fees, on the spreads? Is it happening?
So we already see ETNs and ETFs for a while here in Europe. And I think until now, the traction for those products is still, in our view, quite limited. We fully agree that ETNs and ETFs are a good thing. So it will help to drive adoption, which will make the ecosystem bigger than before. You're able to offer those products in a regulated environment, which gives even more security for retail customers. But until now, the annual fees you need to pay to use those products is still quite high. In our view, the spreads on those ETNs and ETFs are unfortunately still a little bit high. We truly think that it will become more efficient. But it also applies for the spot market. So when we launched our exchange, we started to charge maximum 25 bips. It's going further and further down. So I think that both on the spot market, but also on the ETN, ETF market, there is just one trend. Pricing will go down, fees will go down, and markets need to become more efficient. And as an exchange, we are completely fine with that. If we would like to drive adoption, if we would like to ensure that this asset class is more used, we need to be one of the drivers to ensure that there is more efficient pricing. Otherwise, we don't grow our business. So personally, I don't see the ETNs and ETFs as a bad thing. I see it as a good thing for the ecosystem in general. I see it as a different kind of tool to just create more efficient pricing. And let's see what's more efficient. If ETNs and ETFs are more efficient, it's great. If spot volume is more efficient, it's also great. The goal is to get more efficient pricing for customers. And that's what we should drive with all of us.
Now, bringing it back to business models, you talked about fees. We've been talking about fees. Now, I know when I read the Coinbase S1, right, if you remember all those years ago now, Coinbase came out with that crazy S1 filing, and it led to one of the highest IPOs, or whatever they ended up calling it, in the history of the world. So we studied that S1 very closely. Now, it's been 2 years and a bit. We can kind of start doing a report card, and we can talk a bit about those fees, right? In the S1, which was written, I believe, by Balaji Srinivasan, who was just on stage here, and I believe he was behind it, what we saw was a dedication in that document towards more than just fees on trading. They said they were going to get money from launching a fundraising platform where you could do capitalization and financing for projects. We saw what looks like prime brokerage coming out of it, some capital introduction they were talking about. Yep. They were talking about things beyond trading. They were making it sound like there were a bunch of new products that would not be just fees on transactions and trading. What's the report card on that? What is their fee structure like today, years later, nowhere near this S1 heady days of 2021? Totally different environments.
Well, actually, the fees are probably pretty close. But really, the macro point here is that Coinbase presents a vertically integrated business model that is problematic from a regulatory point of view. They recognize that and give them enormous credit for this. I mean, Brian Armstrong has been at the tip of the spear fighting back against bad regulation. But the issue that people worry about is conflicts of interest. Right? You know, you have a trading desk, you have a prime brokerage solution, you have, you know, an exchange, all these things are different. And the truth is there are conflicts. And so it's really all about managing that. The issue is, can they maintain and can they grow in the area that their S1 said? And my thought is probably yes. I think that vertically integrated solutions are allow you to drive efficiencies, but competitors will, in fact, try to eat away at those margins and those fees as time goes on. I think that you've seen the rise of prime brokers like Hidden Road Partners and Falcon X and others that are eating away at Coinbase Prime's margins, and Coinbase Prime's products are, frankly, older.
Really?
Yeah. I mean, you know, it's like they bought a company that competes with CoinRoutes called Tagomi 5 years ago, and, you know, they have their own kind of in-house closed system. It's sort of the exact antithesis to what the Bitcoin community believes in, which is open systems where you can have competition.
So it's like
in
a
all
black
areas.
box, dark pool OTC desk, or what are you talking about?
No, nothing like that nefarious, but it is a system that you have to use their key. You have to go in through their system and out through their system, and disclosures inside that system are not quite as clear as they are if you put it together. So if you used us, for example, and you could use others, with any of those prime brokers, you could trade on Bitvavo, you could trade on Coinbase, you could trade on Kraken, and algorithms could determine it, or you could determine it, and you know every step of the way. If you use Coinbase Prime, they don't tell you who they're trading with until afterwards, and even then it's not part of the model. So it's a bit less open. And that open architecture, everyone who believes in Bitcoin, and you all see the socks and the ring and whatever, I mean, I believe in decentralization. I think it's important. Open architectures drive better competition, ultimately better efficiency.
Now, you know, when I see that idea of them being competitive and who they're competing against, and it's business models competing against business models, you've talked about them competing against other sophisticated platforms, Coinbase Prime versus other quasi-prime brokerage or approaching prime brokerage service type outfits. We're not quite at the full prime brokerage level yet, I think. But adding that all up together, can we also say that you know, we're in a completely new creative phase here, right? Everything in the old world is kind of falling apart at once. And we're at the same time, building something totally new. And when I think of who Coinbase's competitors are, I don't necessarily keep it all in the Goldman Sachs or other prime brokers. There's a way to see Bitcoin exchanges as competitors against retail banks with a completely different business model that actually looks more similar to private investment banking in that there's more services available to the customer. It's not just getting you in on a mortgage, which is kind of like a subscription customer service type of thing, right? You have a monthly revenue coming from one major investment, real estate. We're talking about getting people rich, maintaining their wealth, introducing them to more capital, giving them the services that rich, wealthy people are used to having, but at the retail level.
Well, look, you know, there's a lot to unpack there, but let's just be specific. So there's 3 different vectors where this is extremely competitive and problematic to the big banks, and it is why the political pushback, and we've heard 3 different panels talking about political pushback right before this one. I mean, it's sad. I got on a plane yesterday to come to America to avoid you having to talk about U.S. regulation, thinking Europeans wouldn't care, but here we are. You know, heard Elizabeth Warren mentioned multiple times. The fact is the big banks hate Bitcoin because they love fiat. They like a inflating currency. There's lots of reasons why they like it. All you really need to know is the biggest banks still pay less than 1% on average on deposits and can make 5% risk-free on treasuries. So, you know, but we in the crypto world can't basically act holier than thou because Tether, the largest, crypto deposit, coin used for trading, pays 0 interest and makes 5% on treasuries. So, this is it's an architect of what's going on now. So that's the value side. The second is the competitive side. I think Larry Fink said it really well. I mean, I've been saying it for 5 years, but that the entire world will go digital. Every real world asset, every stock, bond, et cetera, will be tokenized. The efficiencies and economies of scale are huge. Here's a fun fact. Talking with Franklin Templeton, they have a new stablecoin that they're demoing. It's called Benji because Benjamin Franklin. Anyway, they said it's 50 times more efficient than the traditional way they manage money markets. 50 times. Now, when you consider the amount of savings that could create in the system, all these companies are looking to do them on their own. But where's the real power? In open blockchains, and that's exactly what they're fighting. So that's the third thing that they're fighting, an open financial system. We all lament that 2 billion people on this planet are unbanked. Well, with Bitcoin, nobody is unbanked, and the banks don't like that. They like having unbanked people. They won't say it that way, but it's reality. Because when they can constrain the service, they can charge more for it.
Well, I never even thought of the idea that unbanked has an upside, but there it is.
It's a terrible downside to humanity, but if you're a bank, I mean, when you could constrain entry to a service, people will be willing to pay more for it. Artificial scarcity is, it's as old as, it's one of the worst externalities of monopolistic capitalism.
We're going to hear next from Jimmy Song, who has a book called Fiat Ruins Everything, and it looks like fiat might have ruined banks. So there you go. Now, the next market, let's say, right? Everyone's getting excited. It looks like things are going to change. Maybe there's still some downwards momentum. We'll see. But as I said earlier, we're in a recreation phase. We're in a new creative phase. We're redefining all of this stuff. We've seen trends pick up and sort of define the last couple of cycles. A lot of people think Bitcoin can really be at the center of this cycle. Bitvavo, you're sitting here at the beginning of a new market. Looks like the end of another one. Larry Fink, just a quote on him, right, saying that Bitcoin was hope. He's going on about people lacking hope and that Bitcoin can offer hope. How are you handling this from a marketing point of view? How are you handling this from a preparation point of view? I know I was working with Kraken in 2020, leading up to that market. Everyone was getting ready. We were hiring customer service people. We were not going to have any downtime. Everyone was preparing. Is that the feeling inside right now? Is that what's going on inside of exchanges? Are you gearing up, tuning the machine for another big run?
Step by step. So I think that you're spot on that the crypto market goes in cycles. I think every cycle takes around 4 years, and a lot of people are expecting a new cycle in 2024, 2025. I think besides the crypto cycles, also the macroeconomic circumstances are quite important, given what interest rates are doing and how much cash is available in the market. I think as a company, we are heavily focused always on our tech and product to ensure that you're well able to scale if you would like to process even more volume, which is really the thing which is most important with our services. But secondly, you also need to ensure that you, on the right moment, accelerate with your growth by investing in your marketing departments, by investing in your support departments, and by ensuring that you're able for the next wave. In our view, that next wave might come up somewhere later in 2024. We especially see US firms already preparing for it, and we will do the same. We will do the same to ensure that we're ready for it, and we truly believe that the next wave will even be bigger than the last one.
Well, I'd say everything looks that way. 2024 looks like Bitcoin is going to be on the tip of everyone's tongue in America, in Europe. From that American perspective, right, we got all kinds of political candidates talking about Bitcoin. What about you guys? Are you preparing? Are you anticipating? Are you gearing up? 2024, is it going to be the big year for you guys?
Yeah. Hope is a terrible business strategy. So what we decided to do was when FTX blew up, we focused ourselves on more decentralization. So, for example, we've invented a proprietary smart contract to provide full algorithmic access to DeFi exchanges. Now, this is a Bitcoin conference, so I don't want to talk a lot about that. But we also have spent a lot of time working with prime brokers and working with enabling technologies such as Copper and others to allow people to get better execution prices. What we're most excited about is something that seems mind-bogglingly obvious but isn't, which is right now almost all of our customers are proprietary traders, people who if they trade at a lower price make more money. Where we don't do as well is with agency traders, because if you're trading for other people where the other person makes the money, you don't really get a benefit by trading better. Well, regulators don't like that very much. And so MICA and the FCA are both going to start pushing this concept of best execution, which is terrible marketing. It really means being able to buy more efficiently and removing those, removing that frictional barriers. So we're kind of excited as that goes on. Personally, my Bitcoin is not going to get touched, for the next year at least, and we'll see where it goes.
Hodling is a use case, no doubt about it. And we did definitely hear, I think, a pretty clear view on what's happening with exchanges in 2024. A lot is going to happen, so we'll wait and see. Please give Mark and Dave a big round of applause. Thank you for your patience.
Welcome back to Bitcoin Amsterdam Live Desk, presented by Bitcoin Magazine. I'm joined once again by Eric Kaysen, Bitcoin philosopher and author of Crypto Sovereignty, and Susie Ward, Bitcoin journalist. So we just listened to exchanges, Bitcoin exchange business models. Obviously, they could not stop but say SBF and FTX. We just heard the trials just began just a few days ago. It seems to be a lot of he said, she said between SBF and Caroline Ellison. So, Eric, I'd love to get your thoughts on everything that's going on with the collapse of FTX.
First of all, it's hilarious. It's really great to see all of this dirty laundry getting aired publicly. But I also think it's really interesting, you could just see from the demeanor talking about the exchanges that a lot of people were hurt a lot by what happened, and they're really hoping for justice, as sort of comical as this is. And hopefully we'll actually see that play out in a meaningful way.
Yeah, Susie, I don't know if you had a chance to read any of Michael Lewis's book. He just had a new book come out talking about everything that was talking about FTX. Obviously, many people thought he was going to be talking about the demise of FTX, very similar to The Big Short, but it seems he was taking the opposite way of saying, like...
He started writing it, didn't he? And then rather than continuing it with the story, he just carried on with this wonderful kind of... Yeah, no, it was weird.
It was definitely very weird. It seemed that he was on Team SBF. He said he was misguided, said that he was tricked, said that they had a true business model. I think many people, John Ray took over FTX while they declared bankruptcy. He was the famous CEO of Enron, saying that this is even worse than Enron, the fraud that was committed 20 years prior with the Enron of it all. But I guess time will only tell where this shapes up.
Well, the other thing that Michael Lewis did is it seemed like he fundamentally misunderstood the difference between an exchange model and a banking model. Mm-hmm. And I was pretty shocked with somebody that had such a background to make such an error and then be able to say oh, it's really a good business. So it's quite strange.
He's also not able to pivot either.
Definitely. Speaking of people that are not able to pivot, we're going to big banks. So one of the quotes that Dave had is, big banks hate Bitcoin because they love fiat. Susie, I'd love your thoughts on that quote there.
Why wouldn't you love something that you can inflate?
Definitely. Yeah. No. And even he was saying just their business model of basically he described the Cantillon effect. Basically that they get money at 1% rates and then they can loan it out for 5%. So, Eric, going over to you. Larry Fink had a quote said, the entire world will go digital. We hope that they immediately go to Bitcoin, but obviously we believe that they're going to shitcoin or stablecoin along the way. What are your thoughts to Larry Fink?
I mean, those things probably are going to happen, and that's kind of why there needs to be a general vigilance, that we need to be teaching and educating each other about what the self-custody of Bitcoin means and how that's different from other models.
Definitely. Thank you so much. We're going to the Trust the Experts panel, so looking forward to that on the main stage. Catch you soon.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.